Now more focus is going to be on the calculation part. All the terms have been already discussed and hopefully that those are clear to everyone. So now onwards we are going to concentrate only on more on calculation, understanding the calculation part, what need to be calculated and what need not to be calculated. So those things we are going to concentrate. First of all, we are going to cover the credit report, and after report, going through the credit report, we will cover okay. So first of all, we are going to cover the credit report, and post that we will cover the income. Then we will move to the asset and appraisal and towards our dummy loan, right? Practice. More practice need to be done now onwards. So as I have already told you guys that you need to be with your paper pen, or if you are working on the laptop, that is going to be good, so that you can easily calculate, right? And whatever the notes you need to make out, you can make out. Okay. So let's start. Before we start with our, first of all, we are going to see how to calculate the DTI. What is actually DTI? DTI stands for debt to income ratio, right? But before starting with debt to income ratio, we also need to see another term, that is details of transactions. Now, what are these detail of transactions? Detail of transactions is how the closing cost comes to, what closing cost borrower will bring in or he will get. So when borrower need to bring in cash to close, that is called cash from borrower. Now, this means borrower need to pay at closing to close this loan. There is another form, that is cash to borrower, right? There, borrower will get some cash in the closing. Now, mostly what happens, if it is a purchase, who will get the money? Obviously, seller will get the, right? What we discussed while going through the closing, remember closing part, how the closing happens? We create a initial CD. First, it will be the LE, loan estimate. Remember, within 3 days of application date, LE need to be released, and then we will keep continuing. Redisclose the LE means whatever the data we are going to change, if that is going to affect the fee, the new LE will also be created, right? Like loan amount is going up and down, obviously the fee will get changed, right? Interest rate goes up and down, fee will change. Accordingly, every time we are going to make the change into an application, LE will get changed. So we need to send them LE. Then there will be a final, not final, but the last LE. Means once the underwriter approved the loan, then LE will stop there, because now loan is approved, means loan is logged permanently that I have approved this data, it cannot be changed. So then LE will be converted, or will be a CD will be prepared. Who is going to prepare the CD? Obviously, it can be created through the system. Now, all the fees, those were finalized on LE, will be shifted to a new document that is called closing disclosure, right? In the closing disclosure, all the fees, right, and what cash need to be paid to different parties, everything will be disclosed here in this CD, and this initial copy of CD will be created to the system and will be sent to attorney, right? Title company, attorney means to the title company. Now this title company is going to read this, going to verify this, going to review this according to the compliance, and then they are going to take care of, means whatever written in the CD document, right? Whatever the details, origination fees, right? And processing fee, underwriting fee, credit report charges, and appraisal charges, then title charges, all these parties need to be paid. Sometimes there could be some fees which could be paid paid, in front. Sometimes we might say borrower to pay the credit report. Sometimes we might say pay for appraisal. So they are going to pay it in advance. So that will be written like paid by borrower. So that will not be counted in the right. So this is how all the transaction fees will be written here. Like let's say somebody is going to purchase the property. So it's a purchase loan, right? What happens in the purchase loan? 100,000 of property need to be purchased. That means seller will get paid of 100,000, right? So here, who will get the cash? So seller will receive $100,000. But this 100,000 could be reduced to 1995. Why? Because there is another thing that is called EMD. EMD we already discussed. Earnest money deposit means advance to book the property. Biana. That is the amount that will be paid earlier. So let's say $5,000 paid to book the property. Earnest money deposit. This has been paid already. So obviously from this 100,000, this 5,000 already paid. So it will become 95,000, right? Then there is a possibility seller might be telling that I will pay the taxes, I will pay some other closing cost as well. So accordingly, all the money will be deducted from here, and whatever the total money at time of closing, at time of funding need to be paid, that will come, that is going to appear exactly the same amount with all this breakdown, whatever already paid, right, on the CD document. Right. So whatever going to be on the CD closing disclosure, that comes under this detail of transaction on the loan application. Where is the loan application? In the lender sheet. Uniform residential loan application lender information, right? Here is the detail of these are the detail of transaction. Qualifying borrower, minimum required funds or cash back. Same thing. Required funds means borrower is bringing something to close the loan, or borrower will get cash back. This is called detail of transaction, DOT. Right? They have changed the name, qualifying the borrower minimum, but it is also known as detail of transaction. What are the transactions detail? All this information will appear as it is on the CD as well, right? So if it is a purchase case, right? Let's say it's a first we will review a purchase case. Sale contract price means what is the contract price? I'm writing here $1,000. Sorry, $100,000. This is the purchase case. Sale price for the property. Now improvement, renovation and repair. There is a possibility as a borrower, I'm going to purchase a property for 100,000, but there is some improvement or repair or renovation also required. So I'm telling, okay, you pay me 100,000, right, for the property, and 10,000 you need to spend on the renovation. Means you need to repaint the home or you need to repair something. So it will become total amount is going to become the 110,000 for borrower. Property he is going to purchase for 100,000, but borrower is telling that it is not for 100,000. 10,000 का रिपेयर भी करने को पड़ा तो वो भी मेरे को पड़ रहा है, राइट? तो मेरे को तो प्रॉपर्टी 110,000 में पड़ रही है, राइट? That could be one scenario. Let's not get into that. Now land, sometimes I'm purchasing a property, I also purchasing a land separately. Very minimum cases, right? But that could be a scenario. The next is for refinance. Now, if we are in the purchase here, then obviously refinance we are not going to look at because it's a purchase case, right? So let's skip this. We will come later when this could occur. Okay, so as of now, it is not non-relevant for us. It's a purchase case. Now, next, credit card, other debts paid off. Remember, if it is going to be sometimes what happens like borrower might be paying more, might be paying credit card, might be paying some other debts. Remember debt consolidation in a cash out loan, right? So if he is going to pay some debts along with this transaction, how that is going to happen, that is what exactly I'm going to tell you here. I'm trying to tell you here. So what happens? There will be an escrow account. Remember escrow account, right? Who opens this escrow account? This attorney, right? So 100,000, that is the purchase price, borrower is getting 80,000 as loan amount. Okay, so this is the 100,000 for the property purchase price. Now loan amount is 100,000, $80,000, right? What going to happen? Who is going to pay this loan amount? Who will pay this $80,000? Lender, right?
Lender.
So it will be paid by lender. To whom lender is gonna pay? Lender will deposit this money in this escrow account. 80,000 going to wire, right? That is why you will see in your loan wire transfer, right? Or wire instructions. What do we mean by wire instructions? Wire instruction is a document, one-page document. In that I'm going to upload the wire instruction on the website as well for your reference. Wire instruction is one document where lender, attorney, this title company is going to give, this is the escrow account opened for this loan, right? It's a normal account in any bank. It can be opened, right? Who approve these escrow accounts with this loan number, right? And custody will be as of now given to the attorney, closing company or this title company. They will have the custody for it to operate, right? So lender is going to add 80,000. This is the loan amount added to escrow account. Now, if 100,000 is the property value, right? 80,000 lender paid, deposited into the escrow account. So down payment, rest of 20,000, who is supposed to pay this 20,000 down payment?
Borrower.
Borrower. So borrower is going to add this $20,000 in this escrow account, right? So let's say 20,000 is need to be deposited by the borrowers in this escrow account. Now there could be different scenario, like I told you, borrower might have paid 5,000 already as a EMD. So in that case, 5,000 already paid to the seller. So he will provide the receipt for that 5,000 plus he's going to add 15,000 here because 5,000 is already paid. Does that make sense? Right?
Yes.
So this much 100,000 is here in available here, right? Now this account manager or this title company, they received 100,000 in the account. Now this title company is going to pay this 100,000 or maybe 95,000 in some other scenario to the seller. They are going to fund this amount to the seller, right? Plus lender also require money. Lender has paid 80,000, but transaction fees, remember closing cost that we are talking about on the closing disclosure, origination fee, processing fee, underwriting fee, credit report if they paid for credit report, if they paid for appraisal fees, title, taxes, right? Everyone need to be paid. So all that money need to bring in. Who is going to pay that? Borrower, right? So 80,000, let's say 6,000 extra is for the closing cost. So borrower is supposed to pay 20,000 for the down payment plus 6,000 for the closing cost. So total 26,000, right? In this case, how much borrower is going to pay? $26,000. This 26,000 we are going to say closing cost. This is called closing cost that borrower will bring in. Bring in means borrower is going to deposit all this money in this account. No cash is acceptable. They need to deposit this money into the escrow account, right? Will be transferred to this escrow account. Now this attorney is going to pay all the parties according to this CD. In this CD, everything is written. Borrower, seller will be paid 95,000 or 100,000, right? And title company will be paid, lender will be paid, everyone will be paid by this attorney. That is why we are creating this closing disclosure. And we are giving the closing disclosure. This is the fee structure. Accordingly, everyone need to be paid. Now, in some cases, what I was telling you, let's say borrower is also going to pay 2 credit cards. Borrower telling, no, I also wanted to close these 2 credit cards of American Express, right? Maybe 5,000 each, so 10,000. So borrower will add this 10,000 also here. So 36,000 will be added by borrower And these credit card will also be taken care or will also be paid by the attorney to those banks and will get a NOC, means no objection, right? Or maybe a clearance from those banks. So that is why debt consolidation, how that work. But I'm telling you that in the debt consolidation, borrower will tell, I'm gonna pay this, gonna pay this, gonna pay this. So most of the time, borrower need not to do anything. He will only disclose that information. That information is going to appear in the CD, in the closing disclosure, that Citibank credit card, 5,000 balance need to be paid. American Express credit card, 5,000 need to be paid. So everything will be written in this CD, and accordingly, this closing attorney, that title company, is going to clear all them. That is why this closing fees is or this CD is very important. If CD has even a $1 mistake, right, then title company is going to be, going to suspend this or going to stop it, and they need to review it again and again. That is how they are going to clear all the details, right? Okay. So now let's come back to this. So credit card, if somebody wanted to pay credit card, that amount will be written here, right? Borrower closing cost. Now borrower closing cost, including prepaid and initial escrow payments. So initial escrow payments means there is a possibility that some amount need to be paid early in the escrow account payments. That first month payment might need to be already paid, right? Or prepaid. Prepaid means some amount which have been already paid by lender or some other party, right? Those also need to be paid. So what is the total closing cost? That need to be written here. So let's say in our example, it was 6,000. Discount points. We already discussed about the discount points. Discount point means buy down. Remember? Buy down. We discussed this buy down option. So borrower can purchase a buy down points and to reduce the interest rate. If that is the case, then they might have to pay some amount in advance, right? For those to purchase those amount, that interest rate, they might need to pay certain charges, and those charges will be written. Now, total due from borrower. In our case, borrower is not going for any buy down, nothing. Borrower telling this is sale price, this is the closing cost. So total money that need to be bring in, that is $106,000, right? This is the total money borrower required to take this loan to purchase the property. Total money means this is the arrangement borrower need to make. Total arrangement 106,000. Now we are going to see on the second part how borrower is arranging this 106,000. Borrower telling loan amount. I will take loan amount for $80,000, right? Other new mortgage. If I'm taking another loan, I told you bridge loan, subordinate loan, second mortgage, right? Those are the loans borrower can also take. Borrower doesn't have $20,000. So he might go for the second loan for 10,000, 15,000, right? If he goes, that amount will be written here. In this case, borrower telling, no, I will take 80,000 loan. Seller credits. Seller credits means sometimes seller also give discount that, okay, I will pay you 5,000 discount, right? Other credits, if borrower gets some other credits, some gift funds from mother, father, or any other blood relations, or from employer, or from state. So those amount could be written here. Total here as of now 80,000 is total that borrower has arranged. So now 106,000 need to be arranged, 80,000 arranged. So what is the total money that borrower need to bring in to close this loan? Simple. 26,000 means this money borrower is going to bring at the time of closing, means this 26,000 need to be paid by borrower, need to be deposited into the escrow account. Is that fine? Understood how the closing cost will be calculated? Right?
Yes, yes.
Okay. Now, the similar way, if it is a refinance case, then what is going to happen? We will discuss it later in a detail when we will be going through asset, but I'm just giving you an overview because these are the terms which we are going to use many times, right? Let's say it's in a refinance case. So obviously, if it's a refinance, so this purchase we can ignore, right? Because it's a refinance, why to look at? We will directly go to here. So refinance means somebody going to refinance the loan, means he is going to refinance. whatever current existing. So refinance means current existing loan need to be paid. Who is gonna pay? Again, we are going to give everything to attorney. So we are telling $80,000 that is the existing mortgage that will be paid. But in this column, they are telling refinance balance of the mortgage loan, right? For the subject property that need to be paid in the transaction, right? 80,000 plus credit cards. Now, sometimes borrower might be paying off this 80,000 and borrower telling there are 3 credit cards that I also wanted to pay. So they might say it's overall $20,000 that I need to pay, or I want to, pay off everything. Closing cost, again, let's say it's 6,000, right? Discount point, no discount point. Now, how much borrower need to arrange to pay off all this? 80, 100 and 106,000. Okay, how borrower is going to arrange this amount? Borrower telling I'm going to take 150,000 loan amount, right? So now see, there is nothing else borrower is getting. So सीधा सीधा क्या होगा? 150 is the loan amount borrower is taking, and how much he need to pay? 106,000. So what is going to remain behind? 150 minus 16, 44,000, right? 44,000 is going to remain behind. Not here. $44,000 borrower will receive in his hand. It is called cash to borrow, right? Cash to borrow, and it will remain in minus mostly. If it is negative amount, means borrower will get. If it is positive amount, means borrower will pay. Clear? Detail of transaction?
Yes.
Very
The,
good.
the negative amount will be there when it is a cash out, right?
Yes, cash out. Whenever you see negative amount, means borrower will receive this amount. Means
Okay.
right? And if it a positive amount, borrower will bring in, borrower need to pay from the pocket.
Okay.
Okay. We will go through this again when we go through the closing, when we are going to, see the closing cost more in detail when we will cover the asset part. Don't worry. I'm just giving you an overview because there are so many terms that we are going to use. Okay. Chalo, let's come to the today's chapter, and that is DTI. Means debt to income ratio. Debt to income ratio. What do we mean by debt to income ratio? All the debts, right? All the debts divided by income. What is my total debt compared to my income?